Going on, everybody? Good evening. We're gonna get this one going in just a couple of minutes. That's not what I want. Go. How's everybody doing tonight? Hopefully had a good week, good day so far. Let's get this guy up here. What's going on, Rudy? 1K, welcome in. Thanks for joining. Glad to hear it. Guys feeling well so far. We got a different lecture for you guys here starting in a bit. I won't talk too much about it, but we'll give everybody the chance to hop on in before we get right into it. As always, though, should be a fun one. Let's see if you guys all agree, though. What's up, Travis? Got the flips frog going. Jesus. Anything interesting going on in people's day today, or everybody's just done nothing up until this lecture? Nice 1K. Give it just a couple more minutes before we get going, and then we'll get right into it. Got a couple people that made it out to the gym before this one. Happy to hear it. Sent out that little voice message before we got this one started. I thought maybe it'd be a little something a little different. I like to remind everybody what lecture is going on this evening before we get too close to the time. So gave you guys all an hour warning on what we had going on tonight. I didn't today, Rudy. I don't have enough time since I'm on the West Coast. I It's only 6 p.m. for me, so still pretty early. You said I. All right, give me 1 second to get this last message going, and then we will get going. Just joined Discord today. Welcome in. We're happy to have you. Is it right to join these classes right away? Yeah, absolutely. And I'll introduce kind of the format of these classes, but it's a great, this is actually a pretty good one, I'd say, for your first class. You know, it's certainly not going to be perfect, as we'll touch on some more advanced topics, certainly. However, definitely not a bad one to get started on for your first one. So, yeah, I'll make sure to keep those that are a little bit less experienced in the loop on what we have going on. What's going on, Manny Carr? Nice to see you. All right, it's a couple minutes after the hour, so let's get this one rolling. Welcome in, everybody. For those of you who are brand new, haven't been to one of these lectures before, my name's Tostie. Been doing these classes for, let's think, since January 21, so more than 3 years now. So been a good time so far. Hopefully, we keep these going for a lot of years to come. But that said, tonight we are going to be covering the sectors of the market. So just to get right into it without wasting any time, I got a couple of remarks before we get too deep into this one. So let's get right into it. A couple things to mention before we get started. In general, the way I like to structure all my classes, and those of you who have been to many of my classes have heard this spiel many times before, so I apologize. But for those of you who are new to the classes, the way I like to structure them, sometimes we'll have these kind of PowerPoint-based classes. Other times we'll be mostly focused on the charts. Tonight, we're going to be reasonably dedicated to the PowerPoint. And a lot of what I like to do is start with a little bit more simple concepts. So trying to introduce everybody, kind of warm everybody up to the topic for the night, make sure everybody has the same foundational knowledge. And then as we proceed throughout the class, generally things get a bit more difficult, ideas get a bit more complex. So expect to have that same kind of pace as we move throughout the content for the evening. In addition to that, if you have any questions, comments, feel free to throw them into the chat and I'll get to them as soon as possible. Wow, that's a new picture from new. That's actually pretty funny. I'm gonna save that one. That's good. Wow, that's pretty funny. All right, let's get going. So for those of you who have been to some of these classes before, some of you may not. This class tonight is part of our larger beginners course series. So we're almost towards the end of it here. So we still have a couple more left, but almost 3/4 of the way through after we finish up tonight. So covered a lot of different materials so far. For those of you who haven't seen any of the classes before, if you want to catch up on them, a lot of them are all kind of scattered throughout this latest classes tab. I don't know if they've been getting organized. Okay, looks like they've been getting organized in this beginner section. So you go back to this beginner section and you should be able to catch up on a good chunk of these ones that have been updated before. But yeah, that's really the big idea. That's where we're at. And just kind of as a reminder for the beginners course series, the real main goal is to develop successful traders who can find and execute on the highest probability trades and act on these opportunities with confidence. We've given this beginners course series multiple times before, and I really do think this has absolutely been an outcome for so many people who have gone through it. And I hope those of you that have reviewed all of the classes as part of this course series also are finding that the outcome has been similar. So that said, let's not waste any more time here and get right into it. So starting from kind of the ground up here, there's a whole host of sectors in the market, but I want to take a quick step back before we talk too much about the various sectors of the market and rather focus on how to actually monitor those different sectors. And it would be a little bit of a disservice for me to just get right into monitoring sectors without talking to you guys about defining what instruments actually facilitate what I'm calling the monitoring of sectors. So maybe a little bit of a cryptic statement there, essentially to summarize that, and I'll call it layman's terms. These sectors or the ways to monitor sectors is a little bit different, right? For example, any individual stock you can put in the stock ticker, and that's pretty much it, right? So if you want to take a look at how Amazon is performing, you could just put it in the ticker AMZN, and there you go. You have all the history over the past however many years Amazon has been public, and you can take a look at that chart. Whereas for a sector, you can't just say put in big tech necessarily as the ticker, and it comes up with all the Mag 7 names. So there is things called ETFs or exchange traded funds, which are different securities listed on the stock market that tracks maybe indexes, sectors, or other assets. So the big idea is that these ETFs are created in order to monitor different sectors. And these ETFs are comprised of a whole host of companies within a given sector. So for example, you could think of maybe an industrials sector, right, which is a real sector, which will be comprised of stocks such as Caterpillar, which makes those like, the backhoes and cranes and stuff like that, or John Deere, which also makes similar products, also lawnmowers, those types of companies. So for example, that's where we would really be getting our information regarding these sectors is from these ETFs. So just to define what an ETF is before we kind of get too far down the road, again, as I mentioned, it's really the fundamental purpose of an ETF is to track something else. So for example, your Amazon, your Apple, your Microsoft, that is a share of a company that you're purchasing when you purchase Apple. When you purchase an ETF, you're getting microscopic, or not microscopic, but smaller fractions of shares as part of purchasing the single share of that ETF. And an ETF tracks a whole host of different, I'll call it groups of stocks. So it could track groups of stocks. It could track things like bonds or maybe commodities such as gold or copper or uranium. It could even look like tracking things like oil or even currencies. So things like the dollar certainly have their own publicly traded ETF. Not too sure about other public currencies. I'm sure they exist, but a little bit less common. In addition to that, some of the most common market indexes also have their own ETF. So I'm sure many of you, even if you've never traded once in your life before, have certainly heard of the S&P 500. You've certainly heard of the NASDAQ. You've certainly heard of the Dow Jones. Those are all over every news channel, every website. I mean, they show up by default in like your Microsoft browser, I think, these days. So super common names. And these indexes are not something that is tradable. And there's some caveats to that, but let's just say these indexes are not tradable. So the SPX, the NDX, the DJIA, the RUT, you can actually go and purchase shares of those indexes. The way to actually get a kind of fraction of that index is by purchasing an ETF that tracks the index. So for example, you'll see mainly we're trading SPY over SPX. Now, a little bit of kind of a funny one there is SPX and NDX actually do have options, but they don't have shares. So kind of a weird one there. I want to just try and ignore that for the purposes of this class. So let's just say that the indexes are not tradable, the ETFs are, and that's generally the idea. But yeah, so these ETFs are essentially exact copies of the index, and they really pretty much track one-to-one. So we can go ahead and compare those two really briefly. So for example, if we compare QQQ to NDX, so NDX on the right here, QQQ on the left, just make it look the same. And go to the daily. These two charts generally look the exact same. So they pretty much track each other identically. You can see from the bottom to the top here, this is about a 31% gain, and bottom to top here is also a 31% gain. So they effectively mirror each other perfectly. The ETF is generally designed as an exact replica of the index. And there's times when they get out of balance and need to be rebalanced, but for the most part, they are effectively perfect one-to-one copies of each other. And I mean, right now I don't see any significant, easy to spot differences. So they look pretty good. They're real close to being balanced with each other. So that's the big idea behind the ETFs and indexes. Just helps us kind of introduce the idea of the ETF. And again, a couple more examples of that. You can see S&P ETF compared to the index. It's the exact same idea. RUT index to the ETF, same idea, right? They're exactly mirrored. You can see some differences, like here at this high, looks a bit different than there, but for purposes of this class, they're effectively the same. Everybody clear on where we're at so far? Rudy's feeling good. Rudy's feeling clear. Any questions, comments, concerns so far? Cool. All right, I'll take the no mention of concerns. What is Spider? Oh, that's a good question. Yeah, so on TOS, sometimes it shows like a logo for the, what's it called? Like the equity that you're trading. So it might show like the Apple symbol. I think I have that disabled, but you could just like re-enable it. And here probably, let's see if I can find it quick. Yeah. Okay, the NASDAQ doesn't have one, but if I look at like SPY, Apple, Amazon, Microsoft, it'll show like the symbol logo sometimes, which actually is pretty clean. I kind of want to turn that back on. Anyway, Spider is essentially, it's owned by State Street, I believe. Spider stands for something, SPDR. I don't remember what that stands for off the top of my head. It's essentially just the firm that manages that ETF. And I believe it's owned by State Street, which is a larger firm. I don't believe they're owned by BlackRock. I think they're separate. But yeah, essentially they're just the firm that manages the ETF. That's pretty much it. So they essentially take the dividends that the ETF receives, I believe, as a profit, because the S&P doesn't pay dividends. Yeah, so that's a kind of return for managing it. And they actively balance it as the SPX balances. So as the makeup of the SPX changes, they balance out the SPY. So yeah, just to kind of introduce what all these different indexes are, because I didn't mention it. The S&P 500 tracks 500 large companies, so that list is changed every quarter. So some companies fall off the list, some companies are added to the list. The Nasdaq tracks normally 100 of the largest non-financial companies, which ends up being mostly technology. The Russell ends up tracking about 2,000 small cap companies. The Dow tracks 30 blue chip companies, so like Visa, probably Home Depot, Microsoft is in there, Amazon, I think. And then the VIX represents the 30-day expected volatility as it relates to the SPX. So generally, this can be a kind of gauge for volatility or fear in the market. So you'll generally see this VIX move inverse to the SPX. It's not a perfect correlation, so don't treat it as such. It's just generally how it works. So yeah, that's what these ETFs are. Again, I guarantee that everybody's probably heard of these, and if you haven't, um, that's fine. But yeah, it's impressive actually. But yeah, I would assume that most people are reasonably familiar with at least these terms: S&P 500, Nasdaq, Dow Jones, and maybe even the Russell. All right. So moving on here and talking a little bit about some of the specific sectors in the market. Generally, there's, I believe, 11 sectors listed here, which are commonly referred to as kind of the sectors of the market. So starting off at the top here, I think everybody's probably familiar with our technology stocks, which could look like your Microsoft, Apple, NVIDIA, maybe Adobe. Next up, kind of most commonly known, is going to be your financials. Some of us might have bank accounts with these people or credit cards. Could look like JPM, Bank of America, Visa, or PayPal. Next is your communications types of stocks, which actually includes Google, Facebook, Verizon, AT&T, and Netflix. Then you have your healthcare stocks, which again, some examples: Johnson and Johnson, Pfizer, Thermo Fisher, Abbott. Some consumer cyclical stocks. This one technically can include Amazon or Alibaba, those kind of online stores. Even Tesla or Ford, your kind of auto manufacturers, sometimes can fit into this category. Some people make the argument that Tesla is more of a tech company than a car company, and that's really where the valuation is sourced from. Even your McDonald's could fit into this consumer cyclical category, probably Chipotle, Cava, those restaurants. Yeah, so energy generally is made up of oil and gas companies, very simply put. So ExxonMobil, Chevron. Sometimes I think even in the XLE, you have some of your solar stocks. So like Enphase is a solar stock that fits into that energy category. Then you have your industrial stocks. So this could look like Waste Management, FedEx, 3M, John Deere, Caterpillar, those types of companies. Consumer discretionary stocks, which can generally look like some stores, so Home Depot, even Altria, which is Philip Morris now, I think, which owns like Zyn, and what else do they own? Like Marlboro and a bunch of other cigarette companies and nicotine stuff, and Juul, they own Juul. And now we're getting into some of the less commonly known sectors. So you have your real estate companies, which I'm not even going to name specific tickers because it probably means nothing to most people. But this is going to be your real estate trusts, people who manage real estate, people who develop, or should I say companies who develop real estate. You have your utilities sector, which is exactly as you might think. Your power companies, your water companies. So some of you in Southern California or California in general might be familiar with the utility company Edison. Those are publicly traded names. Yeah. And then, oops. Oh, what happened there? Oh, and then the final kind of sector here is your basic materials. So this looks like maybe steel companies, chemical companies, paint companies. So yeah, not going to really name any specific names just because they probably won't mean anything to you all. And the reason that I introduce these sectors is, number one, it's important to have awareness that the market is so much more than technology and small caps, right? There's so much more. I mean, there's thousands of stocks publicly traded on the Nasdaq and the NYSE combined. So it is important to understand that the market isn't just Apple, Microsoft, AMD, and Nvidia. It's obviously much more than that. And on top of that, the big kind of idea behind this lecture, and the reason it's important to understand these sectors, is my philosophy and the philosophy shared of some of the better traders, I think, in the world at this point in time, and even from the past, are that some of the best trades are made when you have the market in a given trend, either up or down, a sector in the same trend as the overall market. So if the trend of the market is up, the trend of the sector is also up. And then finally, and ideally, the trend of the sector is stronger than the trend of the market, or the trend of the sector broke out before the overall trend of the market. So let's say, for example, technology broke out before the rest of the market, it would be a leading sector, right? And maybe like basic materials lag the rest of the market, so it'd be a lagging sector. And then finally, you would find the strongest equity in that sector, right? So the name in the strongest trend, or the name with the most volume at the lows, et cetera, right? Plenty of ways to look at it. And that is essentially a great way of narrowing down high quality names to trade, right? You're finding a leading sector in the prevailing trend of the market, right? So you're finding a sector that has led the market in one direction or another. Then you're finding the individual names that have led that sector in that direction quicker than the rest of the market. So it's essentially a line of thinking in order to find the highest quality names, the names that institutions are so kind of driven to enter as soon as possible. And those types of names are truly exhibiting what's called relative strength, which are essentially the strongest names, again, in the strongest trends, and generally have the highest probability of working out in your favor due to that significant institutional backing. So that's really the workflow. If you remember nothing from this lecture, certainly don't forget that. Because yeah, that's really kind of the big picture that we're going to drive home as we continue out throughout this class. We'll go through at least one example on that. And one thing that I want to mention is while this is a list of kind of the larger, I'll call it sectors in the market, there's certainly so many more subsectors that fit into these larger categories. So, for example, within the technology sector, you certainly have its own semiconductor sector with its own ETF that displays what's going on in the semi world. Within energy, you have a solar sector, which shows what's going on within solar companies. Within financials, you have kind of those online payment services. Within communication services, you have those internet companies like Google, Meta, your kind of social media names, even Snapchat would fit in there, which isn't necessarily the same as something like a Verizon or an AT&T. So in general, these sectors certainly are not an exhaustive list of everything in the market. However, most sectors in the market could roll up into one of these categories. So it's important to make that distinction as we talk through at least one example later today. One thing that I want to bring up is there's a real easy way to kind of monitor the status of all these sectors at any given moment in time. And this is actually with a command in Discord. Now, I honestly don't know if this command actually works anymore. We could even just test it out really quick. I, I haven't updated this, but let's see. We'll try and just run this command really quick. I think it was like heat map. Well, all right. Yeah, so it still works, I guess. So there's the heat map in the S&P 500. Looks a little bit different, but it's actually just / heat map. And then you could do the NASDAQ, and it should show you everything in the NASDAQ potentially. Yeah, pretty cool. So anyway, yeah, you could see kind of quickly use those commands to just figure out what's going on in the overall market. So pretty cool way to get a quick snapshot of that. It's certainly something that I've used in the past and just a good resource to kind of take a quick look at. I really like this graphic, the way this was presented, a little bit better than the ones that we just saw there, but those get the job done, and I'm sure this is still available online somewhere. But the breakdown of what we're looking at here is essentially some of those sectors of the market that we just covered. And it's also a great graphic of how those sectors are divided up into subsectors. So for example, you see kind of your technology companies divided up into infrastructure, application, electronics, semiconductors. This is probably semiconductor fab. Even some of your communications tech companies are in here. Then you have your communication services, you have your internet companies, your telecom, entertainment companies. Then you can see your consumer cyclical with your retail names, your footwear names, those types of things. So yeah, really great way to visualize kind of different names throughout the market. And the way this is kind of organized is the larger boxes have larger market caps. So the larger the box you have on here, the bigger your company is essentially. So that's kind of how that works. Any questions on this so far? All right, cool. Everybody feeling good so far? Looks good to Rudy. All right, I appreciate that, Rudy. Husky's feeling good. Good to see you, Husky. Any other comments, concerns? Are we all ready to keep going? All right, let's keep this going. So obviously, we're going to need to bring this point full circle, right? We've talked about the different sectors of the market. We've talked about ETFs, but you might be wondering, well, is there an ETF for these sectors of the market? And that would be a rhetorical question because, of course, there is. So go ahead, screenshot this if you like. This is certainly going to be something for you to refer to in the future. But this is kind of a list of names that I'll look through on either a monthly or bi-monthly basis, sometimes a little bit more frequent than that, in order to monitor what the different sectors of the market are doing. So every single one of these overall kind of, I'll call it roll-up sectors, has an ETF that you could pull up at any time, and you could determine how the sector is doing relative to the rest of the market. So for example, we could pull up something like SPY on the left, which gives us the SPY. And then we could pull up something like XLI on the right, which gives us industrials. So remember from industrials, that was like our Dow or our John Deere, our Caterpillar. And we could see here, our industrials, actually, we even zoom out a bit more, go back 5 years. We can see our industrials actually set a higher high here. So they broke all-time highs back in July when the overall market set a lower high, which is a real nice example of relative strength. So this dip right here well, just as a note, anybody can say anything in hindsight. So keep that, take this with a grain of salt. But overall, you can see throughout this pullback, it looks like industrials not only showed relative strength, but also were stronger when coming out of this move lower in the market. So from all-time highs to the bottom, looks like industrials overall corrected about 23%. Whereas from all-time highs to the bottom, the SPY corrected about 27%. So industrials had a little bit more of a shallow pullback. They also broke all-time highs earlier. And from this low to the high, it looks like they returned about 31%, which I think the SPY did something similar, 28.5%. So similar return from this low to the highs. That's not really something to write home about, 2% there. But certainly things to be mindful of, right? So throughout this entire pullback, industrials remain stronger, right? Case in point there. There's no arguing that. And as the market began breaking out, industrials also were stronger, right? So they have exhibited relative strength for years at this point in time. So just an important note there, things to be mindful of. If we look at something like XLB, basic materials, I think we'll have a different story here. Yeah, so slightly different story where the pullback from all-time highs to the lows, see, I can't see the percent there, was about 27%, so similar to what the SPY experienced. And then from this higher low back in, let's see, July to the highs was a little bit less than what the SPY returned. And you'll notice that the market actually broke all-time highs in Feb of 24, so February 2024, where basic materials broke all-time highs 2 months or 1 month, almost 2 months later, which would actually be an indication of relative weakness. So the market broke out before this sector, meaning that in general, basic materials were lagging the rest of the market. So generally, that's not going to be the best indication of somewhere you want to park your money, something that's lagging the rest of the market. It certainly can present opportunities, but generally something to watch out for. But you can see how a lot of these charts look very similar to the SPY. And the reason behind that is these different sectors, XLB, XLI, XLRE, XLI, are all components of the SPY. So the SPY is made up of all of these sectors, and this is just those sectors broken down a little bit more granular. So that's really the big idea there. Yeah, so certainly important to monitor these sector ETFs. And on top of that, for something like industrials, we could look a bit deeper into the sector and take a peek at something like Caterpillar, which now we see a real kind of great example of relative strength. So again, we'll do the same measurement. So from all-time high to 52-week low, it was about 23%. Caterpillar from all-time high to 52-week low did about 34%. So it was weaker than the rest of the industrial sector throughout this pullback. It broke its all-time highs back in pretty much the onset of 2023. So CAT was setting new all-time highs as 2023 kicked off, and industrials were doing that months into 2023. So CAT actually, wow, this is actually pretty interesting. CAT set a new all-time high at the very beginning of 2023. The rest of the industrial sector didn't set a new all-time high until July. So CAT actually broke out before the rest of its sector 7 months earlier, right? and its sector broke out before the rest of the market. So this is an example of a name that's exhibiting relative strength over its sector. It's following the primary trend of the rest of the market, and also its sector is relatively strong compared to the rest of the market. And you can see exactly how that played out from these September lows here, which I guess the September. Another interesting thing is while the industrial sector was setting lows in October, never mind. So this thing, CAT, returned 70% from the lows to the highs following this low here, which is effectively tripling almost the return that industrials as a sector put in, which just goes to show how much relative strength actually matters, right? Back in beginning of 2023, it was clear that institutions wanted to be in CAT much more than the rest of the industrial sector, and institutions wanted to be industrials more than other sectors in the market. So this is a prime example of finding a high quality trade. We're looking at the weekly time frame here. I mean, this is a chart really from a textbook at this point, and a comparison from a textbook. There's so many different ways you can look at this too. I mean, if you take a look at how this behaved during COVID, about a 42% decline, whereas the overall industrial sector experienced close to on par, about 44%. So nothing much to speak about there. But overall, right, the strength out of CAT, very, very evident, really ever since this break back above all-time highs in 23. Setting all-time highs is always an indication of relative strength, and it's really important to take note on when something does set new all-time highs. That doesn't mean get long instantly when something sets new all-time highs, but certainly you should be paying attention, especially when a name like this sets all-time highs so much earlier than its sector. And again, remember, let's even continue this comparison once more, right? If we compare this to the SPY one more time, go into here, right? And zoom out a bit. Certainly much stronger than the rest of the market, right? SPY from the lows of COVID to all-time highs, 140%. CAT doing 336%. So the relative strength has been evident throughout this chart. And this is now we're seeing the result of that exact relative strength. I mean, it's returning triple essentially what the rest of the market is doing. And the relative strength, I mean, after this break in 2023, you really couldn't deny it at that point. Ever since this all-time high, it returned 50%, which is massive within a year. So that's the point I really wanted to drive home there. At least that's the first point I wanted to drive home, and we'll review another example. But in principle, does this make sense? Does this idea make sense of looking for relative strength and how to find it? Is that reasonably clear so far? Bobby's feeling good. What else? Does it make sense how easy? I mean, this is really not something that's incredibly difficult as well. Rudy's feeling good. Rudy's always feeling good. All right. Happy to hear it. Cool. All right. Let's keep this going. We got a couple more things to cover. Oh, nothing else on the PowerPoint. Cool. So yeah, that was the first real example there. The next thing that I wanted to cover is kind of a live example that we got this done on in the tab this past weekend. And I'll just kind of show you this process happening. I'll call it live, which you can see kind of at least the two main ideas here that I was paying attention to, which were crypto names and oil names, which were actually showing relative strength over the rest of the market. So I want to show kind of a different approach to this same idea. So taking a look at the SPY on the daily here compared to Bitcoin on the daily, these charts certainly do not look the same. So let's take a look at this here. So I noted that Bitcoin was showing relative strength over the SPY on the daily. Reasoning behind that is because the lows here on 417 were essentially an equivalent low to prior lows that Bitcoin had set, right? I mean, this isn't a lower low. Whereas the SPY had effectively broken the uptrend, right? It had set a couple lower highs here and also was setting new lows, right? So this would have been the prior low. So if we take a look at Bitcoin, right, on 3.5, it set this low here. And the SPY on 3.5 set this low here. So by the weekend, the SPY had set a lower low, right? This low is lower than the previous low, where Bitcoin here set an equal low, right? This concept makes sense so far? SPY had dropped in price over the same time period while Bitcoin remained effectively flat, right? So this is kind of your first sign of relative strength. And Bitcoin is really a risk on asset, right? It's something that most people would consider more risky than most other stocks. And generally seeing these risk on assets hold up better than the rest of the market is certainly a reason to be paying attention. As when the market was moving lower in this period of time, that is absolutely a reason of concern. And yet Bitcoin didn't really seem to react much at all, which is really always going to be something to be paying attention to. So that's really what grabbed my eye there. Also holding a real key level here at 60K, round number there. So everybody get how Bitcoin was stronger than SPY coming into the week. Any questions on or clarity required there? If you do, say it now or forever hold your peace, because I'll be expecting you all to be able to perform similar lines of analysis. That makes sense to everybody. Everybody's good on why Bitcoin is stronger than the SPY. It's reasonably simple. Is BTC tradable? Yeah, I mean, yeah, now there's plenty of ETFs. If you wanted to just trade BTC, you could look at like IBIT. What else is there? I don't know. There's IBIT, ARCB, I think. Yeah, ARCB. I think IBIT is one of the more accepted ones. It's the most traded. But there's so many Bitcoin ETFs now. I mean, they're all over the place. Anyway, yeah, so Bitcoin here, certainly stronger than the S&P. No denying that. Moving on to kind of the trade that I took, I ended up getting long on CLSK, which is a name I had really never traded before. However, it was obvious that this name actually was showing some more relative strength than other crypto miners. So we've established that Bitcoin has been stronger than the rest of the market. Now it's time to take a look within the sector of kind of these Bitcoin related names and determine which names look better to trade. And also you could have just traded the ETF IBIT, but I decided to go against that. I decided to go with some of the miners. So just comparing kind of the CLSK name here to something like Mara, right? Kind of another common Bitcoin miner. There's kind of a real big difference between these two, right? From all-time highs to the higher low, CLSK pulled back about 44%. Just a big dump, right? Mara is down approximately 60%, right? Even larger dump. Something like Riot, which is the only other name I'd really compare it to, is down from the swing highs 57%, right? So Mara, Riot down tremendously from the all-time highs, whereas CLSK is certainly a name that's got a bit more strength here. And since this idea, Riot rallied 30 something percent. So still gave a great opportunity there, but a little bit besides the point. Regardless of that, right, CLSK was a name that I had identified that had relative strength over the rest of the Bitcoin sector. In addition to that, it had a lot of favorable things going on as well. Rising volume as price moves higher. That's always going to be something that's a bullish indication. Break above this big level here on the daily. We pull up the volume profile. We can see we got a big shelf right in this area. If I can get it going. So pretty reasonably sized volume shelf sitting right around this area. And I think even if you zoom into the past couple months, it's a bit more evident. Yeah. So big shelf that it moved over as of Friday's close, which is a pretty big deal. Monday's open, we broke above Friday's high, pretty much an easy long there. A little bit of a wick lower, but I mean, nothing to be too concerned about there. And obviously, you know, big move higher from this entry. So 18, 19% move higher off that entry. And really, this is a name that performed better than almost everything else in the market. I don't think most other things besides crypto names performed this well. And all of it was just based on looking for relative strength, looking for something that was in a positive trend when the rest of the market was in a negative trend. And that was pretty much it. So kind of my whole idea over the weekend was that the market was getting into some kind of oversold spots, a little bit overextended to the downside. So as a result, I wanted to look for things that had the potential to kind of continue moving in that opposite direction, a little bit of a reversal, and identifying names that have already reversed before the rest of the market are always going to be places to be interested in and paying attention to. So that was really the big idea with CLSK there. I'm certainly not an expert on these crypto miners. That's definitely more Grizzlies' expertise. So definitely wouldn't want to step any toes there. If you really have questions on this stuff, he's really the best guy to go to. I just can take a look at the charts and tell you what I like and don't like, but couldn't tell you a thing about these companies, and I don't want to. So that's really the big idea. Kind of another similar example there. Hopefully that really hammers that point home. But besides that, that's really the majority of what I wanted to touch on this evening. Before I say we're all done, though, I'll answer any questions that you guys have that come up. So go ahead, throw some questions in the chat, and I'll address those. We got one from Padrino. How do I feel about Shiba? I don't feel anything about it, honestly. I have no idea. I don't know anything about it. I don't trade it. I know it's a crypto coin, but yeah, I have zero involvement, no clue what's going on there. Where do I think CLSK is headed after today? Honestly, couldn't care. Trade's over for me. Made it back to this bear gap. Yeah, I got no concern with what it does. I'll say, it's still kind of sitting in a reasonably bullish spot. However, I'm no longer really that bullish on the market after today, and I was going to post in my tab, but I decided against it just because I didn't want people really going short, because I'm not going short. But this is a bearish pattern, right? We pull up into the moving, or we drop lower on increased selling volume. We bounce into the moving average on declining selling or buying volume. That's bearish, right? That's never a bullish pattern. Now we have a lot of wild cards into the week with earnings. So it's a little bit unreasonable or irresponsible to just say, yeah, go short. But this isn't bullish, right? This is not a bullish pattern at all, right? Price moves lower on high sell volume, bounces up on low buy volume. That's like standard volume price analysis. That's the exact conditions you should be looking for a trend continuation. And that's exactly what we're getting in the after hours. Now, obviously, it's on the backs of Meta earnings and the reaction there. But regardless, this chart certainly is not telling us to get long at this point in time. It certainly needs more time, which is something that we identified over the weekend. And just to show you, the trend, unfortunately, in the short term in the market has reversed to the downside, right? There's no doubt about it. The 9 EMA is below the 21 EMA, which means the trend is down. So there's no other way to spin it. The trend is down. And when the trend is down, you should be looking to get long at support or on overextensions. So this is not the place to be getting long, right? And it never will be. We need to be looking long when the market is overextended. And that's something that I wanted to highlight very clearly in the tab this weekend is the market was incredibly overextended. It was important to highlight the fact that the market has closed below the daily B band 5 times. Last time that happened was January 21. And over the past 5 years, it had never closed 6 times below this daily B band. And obviously, it wasn't going to start, which is exactly what happened. So you got to be kind of tactical when you're long in counter trend or going against the trend. And the trend is down in the market. In the short term, trend is down. You see what to the weekly, the trend is up. But the short term, trend is down, right? 9's below 21. That means the trend is not up. So don't be an idiot. Don't try to be a hero and fight it. The trend's down. If you aren't getting long at support or you aren't getting long on overextension to the downside, you're not doing it right. So that's my piece there. How do I define a weekly pivot? Good question. Essentially, a weekly pivot for me is really just a resistance or support on the weekly. So you can see this is a weekly pivot right here. This is a weekly pivot right here. So you can see multiple kind of tags of this spot here. The reason I'm not calling this a pivot is because it's a previous all-time high, so easier to identify that way. Weekly pivot here, right? This is a prior lower high, always a critical point in the trend, right? You want to be paying attention to those pivots and trend. Those lower highs, lower lows, higher highs, higher lows are always significant. What I think of NVIDIA right now, same perspective as the SPY, right? I mean, this is not bullish. This is not bullish. You bounce on dropping buy volume into the moving averages, into resistance, there's nothing bullish there. It needs more time if you want to get long, if you ask me. Did I review Meta? They had earnings today. Empanada, not much to really say there. I mean, they're getting smacked down. They gapped right back through this gap, which is unfortunate, but yeah, that's the way things go. Healthy reset for them, probably. I mean, they're well above the all-time highs. So A retest of that 384 spot would be a probably real great spot to get long. Do you have any scanners written on TOS to find good relative strength stocks? Nope, all manual for me. Do I usually buy options before open? First of all, you can't buy options before open. The only time you can trade options is from 9:30 a.m. EST to 4 p.m. EST on most stocks. Some stocks you can trade options up to 4:15 p.m. EST on things like the SPY, the Qs, the VIX, some sector ETFs like I think XLE. Maybe you could trade 15 minutes after the bell. But that's only a couple things. What do I look at when entering an option? Generally, it all depends on the type of trade I'm looking at and the volume and open interest on that contract. So, for example, the only thing that I've traded this week is CLSK. On CLSK, it was essentially an imminent breakout that I was looking for. So I actually traded weeklies for the first time in a very long time. I grabbed the 18.5 weeklies. They were close to the money. They were reasonable, very reasonable target. Actually, my first target there. So I grabbed the 18.5 weeklies. It was a Monday. That was pretty much it. So yeah, I always trade based on my trade plan, and essentially CLSK was either going to break out and continue higher, or it wasn't, and it was going to do it on Monday. I mean, that was the moral of the story there. You get this open above or rally back above 1850 or $18 spot there, and you're going to get that move or you're not, and we got that move. So that was really the big idea with that one. How do I feel about SMCI tomorrow? That one's got earnings coming up. It's one I'd probably stay away from, and it's kind of a broken chart similar to NVIDIA. It's really not one that you want to be involved into the long side. It's just, this is not a bullish setup. Now, you could argue that maybe you have this kind of double bottom there at that 700 kind of spot there, but not something I really want to get involved in. Again, like I mentioned, it's a broken chart. It's going to need a lot of time to have some form of constructive setup, because at this point, this chart is wrecked. And I mean, fun or pure technical analysis would suggest that this chart's moving lower. So wouldn't be surprised to see some of these gaps fill. Yeah, I mean, 500 I think would be a reasonable target to the downside on a negative earnings report, but I don't even know what the expected move for earnings is. Let's just see real quick. 430. Yeah, so they're pricing in a 130-point move for earnings. I mean, I guess 500 is a little unreasonable there, but yeah, I mean, on a terrible report, it'd be nice to see 500. And obviously on a blowout report, you validate some of these numbers that they forecasted, and this thing moves right back up to the 800s real quick, 800s, 900s. But it's one I don't trade. I stay away from it. So that's my take there. Any other questions, comments, concerns before we call this one a wrap? Get fired up for the rest of our week together. Do I use the 50 EMA at all? No, I know Flips does. I don't. And I also don't know why it says SMCI on the OTCs. That's weird. What? That's super weird. Huh. Tesla, yeah, I mean, I think it did exactly what it should have done on earnings. Everybody was bearish, and of course it moved higher. That's generally what happens when everybody thinks they know what's going to happen. Of course, the rest of the market's wrong. It's actually starting to set up what could be a meaningful reversal. A failed breakdown would be a reasonable signal to start thinking about this one long. You got this trend overhead that you could draw there to watch out for, but it's actually getting to the point where it's starting to look like it could be setting up some kind of meaningful reversal. Again, very early to say, but it's good to see it back above that 150 and that 160 spot. Yeah, it's definitely got some work to get done here. Above 175 area is really where it can get moving back towards the 200s. But yeah, I think a lot of people are bearish on Tesla. Rightfully so. I think, yeah, I think a lot of people have opinions on how the company's being run and operating, and yeah, definitely not a great quarter for them, not a great year setting up, but That's usually some of the best times to buy is when the least people believe in them, the most people are bearish, and people think they know what's going to happen. Usually that's when shit starts to go wrong for those people. So, and I know Shark's getting bullish. So, yeah, it's looking like there's going to be a big week on volume. I mean, we're halfway through the week and almost on par with everything we traded last week. And this is setting up to be a really big failed breakdown. I mean, this is a terrible breakdown, big bear bar closing near its lows. And if we closed above 170 this week, it'd be a massive reversal. And that actually would even get me a little bit bullish. But yeah, a close above 170, and I think the green light is fully there to be long with stops under 160. Otherwise, just sit patient. Do you think the TikTok ban will help Meta? Yeah, of course. That's a massive source of competition that would be completely gone in the United States, which is a reasonable chunk of Meta's customers. So yeah, I mean, certainly it wouldn't hurt Meta. Because the stock is going down doesn't mean is going to be negative earnings, right? Yeah. So the direction of the stock generally has no impact on what happens on earnings. And that's exactly what you saw here, right, on Tesla, right? The stock was moving aggressively lower. You got a decent earnings report and it just blew out that trend, right? I mean, earnings estimates have gotten so low for the quarter and they blow those estimates out. And this is what you get, a 10, 15% reversal in the other direction. So yeah, the direction of the stock has zero impact on what's going to happen on earnings. Earnings is generally speaking isolated from the trend of the stock. Now it's interesting to say, and there's some kind of theories that some investors have and some better traders have, that sometimes you can almost see the stock begin to price in news that's coming before it happens, because there's always insiders that know what's going to happen before it does. So there's times when people have that theory, but it's something that's not super concrete. So only so much can be said about that. All right, everybody. Well, I think I'm going to call it for tonight. Make sure you stay safe the rest of the week. We still got more earnings, so don't do anything silly. There's going to be plenty of weeks to trade this year. This has been a tough one for now. I got my piece early this week and haven't done anything since. So there's really no reason to kind of sit around and keep trying for things. So yeah, going to call for the evening. Shout out Empanada for pulling up. It just goes to show it doesn't matter who you are. You never know enough, or you never know too much to avoid stopping that learning. So that's even a tip for me. I got to be better about going to other people's lectures because it's been a while for myself. So yeah, thanks again, everybody. So much for your time this evening, and excited to see you guys all in the next one. And make sure you go to River's lecture tomorrow. Thanks for being here, everybody. Appreciate your time. Have a great night.